Hello. Have this all set. Okay. As whoever's labeled ACC 116, can you identify yourself so I can make sure I mark you present?
Taylor Sanders.
Taylor. Okay. Thank you so much, Taylor.
You're welcome.
Okay. So let's go to, gotta switch. Okay. Let me switch to the live now. Let's see how this goes. And we're going to pick up with where we left off last time. Okay, so the last time we were together, we were learning how and when to record revenues and expenses. And so I thought we would start with a little bit of a review here. Let me just shrink this so I can see my screen. Okay, and it looks like we're paused. I apologize, this happens all the time and I still haven't figured out why. Okay, we're live again. Okie doke. So this chapter is about recording operating activities. The last chapter was about recording our financing and investing activities. Our daily operating activities involve revenues and expenses. And so we reviewed a little bit what those were. Revenues are amounts earned from delivering goods or services. Now, when do we record them? Well, we don't record them based on when we receive cash. We record them based on when the performance obligation is satisfied. In plain English, that means when you deliver goods or services. So if you deliver goods and services and you get paid, great. You increase the revenue and you increase cash. If you deliver goods and services and you're not getting paid right away, you can record a revenue, but you can't record cash. You would record an accounts receivable because you're receiving money in the future. So the question that you always have to ask yourself when you're looking at a transaction and how to record it is, were the goods or services delivered in the period that we're talking about? With regard to expenses, expenses are costs of doing business that help us earn revenue. So they're amounts that we use up or benefits that we receive in the process of earning revenue. And often you see the word incur related to that. To incur a cost means to receive the benefit of the cost. So if you received advertising that you paid for, went in the paper, it helped you earn revenue, that's an expense. If you had someone, or if you received electricity for that month, well, it helped you run your business and you received it, that's an expense. So costs of doing business help you generate the revenue. If you've received them in the period that you're talking about, then you record it as an expense in that period. So the question is, did you receive the benefit of the cost? If so, you record an expense. Now, one other thing. Sometimes people get confused between assets and expenses. Assets are future benefits. Remember the definition? It was economic resources that are going to provide a future benefit. Well, an expense is a used up benefit or received benefit. You receive the benefit of your employee's labor. You receive the benefit of the electricity. You receive the benefit of the insurance coverage. So they become expenses when they're used up or received. So this tells us when to record revenues and expenses. How do you record them? Well, it's based on the accounting equation, but we had to switch it up a little bit. Revenues and expenses are how we figure out whether we whether we had earnings or profit, right? Revenues minus expenses, that's how we calculate our net income, which is also called earnings. So because retained earnings is one of the two parts of stockholders' equity, retained earnings has to follow the same rules, increase on the right, decrease on the left. And the same thing with revenues and expenses, because it's how we figure out our retained earnings. Revenues increase our earnings, so we record them on the plus side, which is the credit side, and expenses decrease our earnings, so we're going to record them on the debit side, on the subtraction side. Okay. Any questions about that review? That's in the Accounting Essentials document, and that's in the Chapter 3 folder. On the flip side, there's definitions, important definitions for the chapter. Okay, so we left off here. We were doing problems. We did first, should we record revenue for Bill's Extreme Bowling? And then what are the journal entries? And then should we record expenses? And we left off there. So what we're going to do now is we're going to go to the next page and we're going to record the journal entries based on these transactions. So I'm just going to move this and adjust this a bit so we can see both. Okay, so in 3-4, it said the following transactions are July activities of Bill's Extreme Bowling, Inc., which operates several bowling centers. If an expense is to be recognized in July, indicate the amount. So for A, it said Bill's Extreme Bowling paid $1,500 to plumbers for repairing a broken pipe in the restrooms in July. So you said correctly that we should record an expense of $1,500 because we received the repair in July. Now remember, expenses are recorded with debits, right? So we're going to debit repairs and maintenance expense. Got to fit it in there, so I'm going to use the ampersand. We debit to record expenses. And it said paid, which means we paid in cash. Let me adjust the light here. We paid in cash. Well, cash is an asset on the left side of the accounting equation, so we increase on the left side. But I don't want to increase, I want to decrease. So we do the opposite. We record on the right side, or we credit to reduce cash. Might help if I show you we're reducing the asset cash, and here we're reducing the earnings and subsequently stockholders' equity. Is everyone okay with that journal entry? Any questions? Okay, let's go to the next one. Now this B was one big sentence, but I split it into two parts to make it a little easier. In B1, Bill's Extreme Bowling paid $2,000 for the June electricity bill. And we are in July. So you said last time we should not be recording utilities expense in July. We should have recorded that in June. So let's say we did. Let's say in June we debited, because we debit to record expenses, right? We debited utilities expense in June. If we did not pay it in June, what account would we have used to show that we owed that money? Can anyone tell me? Accounts. Please try. We owe the money, it would be accounts what?
Payable.
Yeah, thank you so much, accounts payable, right. So back in June, when you recorded this electricity bill, you debited utilities expense and you credited accounts payable to show that you were going to pay it later at a later point in time. Now, all you're doing is paying the bill. So we're not going to record more expense, we're just going to record the fact that we paid the bill. And when we pay things, we pay it in cash, right? And we also want to reduce the amount that we owe because we paid it. So if we want to reduce cash, which is an asset, we'll credit. That's where the minus sign is. And if we want to reduce the liability, like accounts payable, we'll debit the accounts payable because the amount, the minus is on the debit side. So our journal entry is debit accounts payable. That will reduce the liability. And credit cash. That will reduce the cash. So no expense for B1 is being recorded. We're just paying off a bill that we owed from June. How about that one? That's a little tricky. Okay, let's try B2 then. in B2, Bill's Extreme Bowling received the July bill for $2,500, not going to pay it until August. Well, we are in July. We're recording July's activities. And if this is the July bill, you said we should record utilities expense of $2,500. So let's do that. Remember, expenses are debited, right? So we will debit utilities expense but we're not going to pay it now. We're going to pay it next month in August. So we'll put it into accounts payable. This is what Bill's Extreme Bowling did when they got the June bill. This is the same thing. This will increase our liabilities because we're not paying the July bill. We owe for it because we received the benefit of that electricity in July. So we record it as an expense in July. Okay, and the last one, Bill's Extreme Bowling paid $5,475 to employees for work in July. Well, we said that if we receive the benefit of their labor in July, it should be an expense in July, $5,475. We debit to record expenses. So we will debit salaries and wages expense. That reduces stockholder retained earnings and consequently stockholders' equity, $5,475. And it said paid, which means paid in cash. We're also going to reduce cash. $5,475. Remember, every journal entry has at least one debit and at least one credit. There's no such thing as a one-line journal entry, like just a debit or just a credit. You always have to have at least one of each. If you have one of each, then the numbers match. If you have more than one of each, the total debits have to equal the total credits. Okay, any questions on that? Yeah, what I'm gonna do is I'm gonna create a poll here. And I'm gonna send it to you to ask you whether you'd prefer me to do the next problem on Connect or on the worksheet. Let's see, multiple options. I have to launch the poll. And where did it go? There it is. Okay, so if you can, I'll keep this open for about 10 seconds. If you can answer the poll, let me know whether you'd like the next one done on Connect or whether you'd prefer it to be done on paper. Okay, we have about 16 people of 18 voting. Okie doke, so we've got 69% preferring Connect. So we'll do Connect today. Another time we can, oh, I'm sorry, I should share those with you so that you see that. It also means some people already dropped out of the class, but hey, that's their loss. Okay, so let's go to Connect then. And it'll give us a chance to talk about a few things within Connect as well, I guess. Okay, so I'm in the practice portion, and I'm just scrolling through here, the ones we already did. These are the problems we did on paper last time. and we finished up today. Unfortunately, the Zoom controls are right below the connect controls, so I'm so afraid of shutting you guys all out. Okay, here we go. Okie doke. In 316, this is the same problem. I'm going to let's see. Let's just see what I'm sharing right now. Okay, so I'm just going to show you what it looks like on paper there. Okay, so the problem we're working on is 3-16. We're going to do the analysis on that page and then the journal entries on the very next page. The next time we come in, we'll be doing the posting and the trial balance. Okay, so let me just get a new share back here, and we will do this on screen. Okay, so what you should be looking at now is my Connect screen. If not, please let me know if you don't see my Connect screen. Good, okay, we're all looking at the right thing then. Okay, so it says in January, Tongo Incorporated, which is a branding consultant, and by that we mean they're like a marketing firm. They help you develop your brand, what the logo should be, what the color should be, what the image they want is. So that's what this company does. They're consultants. They had the following transactions in January. They want us to indicate the accounts, the amounts, and the direction of the effects on the accounting equation under the accrual basis. And they give us an example here. They said to enter any decreases with a minus sign. Well, we know that because we did that in chapter 1. Okay, so in our first example, it says received $9,500 in cash for services rendered, which means delivered, in January. Okay, we said there's a giving and a receiving. What we're receiving is cash. Cash is an asset, so we wrote it under the asset column. And if it's increasing, you just leave the number as it is. You don't put a plus there. What did we give? Consulting services. That's how we earn our revenue. So we'll write here under stockholders' equity, service revenue. Remember, revenues and expenses are subsets of retained earnings. It's how we figure out our earnings, revenues minus expenses. And retained earnings is part of stockholders' equity. After we record every transaction, the left side, the assets, have to equal the right side, the liabilities plus stockholders' equity. Okay, so now let's take a look at the second one. Issued common stock to investors for cash. This is from the last chapter, right? We're receiving cash, we're giving common stock. Cash is an asset, we're going to record it there under the assets, 10,000. Common stock is a stockholders' equity account, so we'll record it there. And our stockholders' equity or ownership in the business is also increasing, so we'll record that with just a clear figure. Again, the left side, the assets, have to equal the right side. No liabilities and 10,000 in stockholders' equity. As we're talking our way through, if you have any questions, please just unmute yourself and ask me. The chat has been disabled because of issues we had in the other class. Okay, in C, purchase $12,000 of equipment, paying 25% in cash and owing the rest on a note due in 2 years. Okay, so 25% of 12,000 is 3,000. So we bought 12,000 of equipment, we paid 3,000. So that means the note has to be for the other 9,000. And it's due in 2 years, so it's a long-term note. Okay, so let's record the equipment. What we received is the equipment. Equipment is an asset. So we'll put it under the asset category and we'll put the full 12,000. That's how much it's worth. That's the transaction price. So we received equipment. What did we give? Well, we gave 2 things, cash and a promissory note. Well, if we gave cash, it should be decreasing. Cash is an asset, we'll write it under the asset category. If it's decreasing because we paid it out, we put minus 3,000. And Connect will change that minus into parentheses. Now, notes payable, or promissory note, is, in this case, we're the ones who are signing it and promising to pay. So for us, it's a liability. And we said that because it's due more than 1 year, it's a note payable. So we're going to look at notes payable long term. Longer than a year into the future is a long-term note. Now notice I didn't go back up to the top row. The reason is you have to keep the transaction within the line, the same transaction letter. Now that notes payable could have gone on the next line down because that's still transaction C, but you have to keep it within the C lines. So the assets went up 12 minus 3, or 9,000. The liabilities went up, or debts went up 9,000, and no effect on stockholders' equity. So the left side 9,000 equals the right side 9,000. Is everybody okay so far? Any questions? Okay, let's take a look at D. Received cash for consulting services to be performed in February. Now, in accounting, dates and months are really important. Let's just double check here, but I think we're in January, right? Yeah, January. So we're getting paid now in January for work we're not going to be doing until February. Well, I can tell what I received there. I received cash, which is an asset. So I'll put cash there with 7,500. But I didn't give a thing yet, right? I didn't do anything. If I owe goods or services to my customers because they already paid for it, does anyone remember the account that we used to record that? Here's a hint. We have to delay recording revenue because we haven't earned it yet. What's the word that means the same as delay? It also starts with a D.
Deferred.
Deferred.
Yes, very good. Thank both of you. Deferred. So we are going to put this in deferred revenue. It's got the word revenue in there, but it's not a revenue. It's a really bad name to call it deferred revenue because it sounds like it's a revenue, but it does not go on the income statement because it's not a revenue. It's a debt. It's a liability. Well, I should say more, it's an obligation. You got paid, so you're obligated to do the work for your customers, right? You owe them the work. So it's under the liability category. Deferred revenue is actually a liability and it goes on the balance sheet. Thank you for contributing that. Is everyone okay with that one? Okay, left side equals the right side, no effect on stockholders' equity. In chapter 4, we're going to learn what to do when you eventually do the work. You would take it out of deferred revenue and call it regular revenue. Okay, in E, bought and received $1,000 worth of supplies on account. Now let me just tell you something that you might see in your homework. If you call up your vendor or supplier or place an order online and say, I want to order $1,000 worth of supplies, that's not yet a transaction. That's a business activity. It's not a transaction till you actually receive the supplies. In this case, we receive the supplies, so we can record it. So we have received supplies. Supplies is an asset. Goes under the asset category. Oh, I hate when it does that. Let's try that again. And we did not give anything yet. We bought them on account, on credit. What account should we use when we owe money for things we buy on credit?
Accounts
Accounts payable.
Very good, thank you, accounts payable. because we owe it in the future. If the money was owed to us, it would be accounts receivable because we're going to receive it in the future. In this case, we owe it. So the left side assets equal the right side, the liabilities, and no effect on stockholders' equity. Also a transaction from last chapter. In F, receive the utility bill for January, $1,250. It's not due till February. Here we are in January. So since this involves January utilities and we receive them, we should record it as an expense in January. That's what we received. So let's put utilities expense underneath the stockholders' equity category. There we go. And we're going to use a minus because expenses reduce our earnings. Revenues are recorded as increases, expenses as decreases, just like on our income statement. And since it's not due till February, we're not going to pay it now. We're going to put it in accounts payable just like we did the supplies. But since the debt is increasing, make sure you show that as an increase, as a clear figure. You don't have to put a plus there. You would just put $1,250. This is a different transaction than we're used to, because usually we're balancing the left and the right side when there's activity on the left. But in this case, F didn't involve any activity on the left side. Everything was on the right side. We had the debt go up and the equity go down. Zero effect. Any questions on that one? Okay. In G, consulted for customers in January, and we are in January. The fees total $15,900, but they're not due till February. So that means you're not getting paid now. We can't increase cash. So what did we receive from our customers? What account will we use to keep track of money that our customers owe us?
Accounts receivable.
Yes, accounts receivable. Where did it go? I better finish that so I can. There we go. Accounts receivable, $15,900. We did the. I'm having a bad technology day, aren't I? Accounts receivable. There we go. 15,900. And because we performed the services, we earned the revenue. So we'll call this service revenue. And that will be under the stockholders' equity. Because revenues minus expenses is how we calculate our net income or earnings. And retained earnings is part of stockholders' equity, so they have to follow the same rules. The left side now equals the right side. Questions on that one? Okay. In H, received cash for consulting services rendered in December. Well, we can record what we received. Cash is an asset. We can increase that by 12,000. But the thing is, we didn't give a darn thing this month. These were for services paid in December, or delivered in December, I'm sorry. We're getting paid now for work we did in December. So we can't record a revenue now in January because the work was done in December. We should have recorded a revenue in December. So let's say in December, we did the same transaction that we just recorded in G. In December, we recorded revenue and we recorded a receivable for $12,000 in December. Now, we're not delivering more services here for the $12,000. We're just getting paid for stuff we already did. So we're increasing our cash. What else should we be doing?
Receivable accounts.
Yes, the accounts receivable, which is an asset, and we're going to decrease it because the customers paid us off. So it's going to be a minus 12,000, right? I mean, when customers pay the company that they owe, they expect their bill to go down, and that's what's happening here. We're reducing our bill, or I should say our customer's bill. We're reducing the amount that they owe us. Why? Because they just paid us. We're not delivering more services. They're just paying us for stuff they did in December. Okay, and our last one, paid $500 towards supplies we bought in E. Here's what we did in E. We added to our supplies account and we added to accounts payable because we didn't pay for it. Now we're going to pay off $500 of that accounts payable. Well, if it says paid, that means we paid using cash, right? Cash is an asset. But instead of increasing cash, if we paid it out, we want to do minus 500. What else should we be doing here? What's the other half of this transaction? You're paying off a bill. Money.
Payable.
Yes, accounts payable. You want to reduce the amount that you owe. Why? Because you're paying it off. Here you added to your debt $1,000. Now you reduce your debt because you're paying it off. Good job. You guys did a great job with this. Now we're going to run through the journal entries, but I'm going to talk you through those because we only have about 10 minutes left, and I want to make sure we get through them all. Next time we come in, we're going to be doing the posting and the trial balance. Any questions with those at all? Okay, I'm going to score that. Did everybody get that? Is there anyone that needs that up a few minutes longer? Okay. Score now. And we're going to go to the next one, which is the journal entries. Okay. So we're going to take the information that you just gave me in the analysis. And when you're doing this, you can always go back to the previous and you could look at your analysis. I'm just going to use the information we just used or what you just told me. So in transaction A, the company received cash for consulting services delivered in January. So we said, or I think they gave us the example on this one, we're going to increase cash and we're going to increase the stockholders' equity account called sales revenue or service revenue. So cash is an asset on the left side of the accounting equation. So we're going to increase by putting amounts on the left or debit side. Service revenue is a stockholders' equity type account. We increase that by crediting because it's on the right side of the accounting equation. Remember, debits mean left, credits mean right. You can see them right here. Debits are on the left, credits are on the right. Is everyone okay with that? Okay. Increase to cash, increase to stockholders' equity account called service revenue. Next transaction, issued common stock to investors for $10,000 in cash. This is a transaction from last chapter. We received cash, we gave common stock. Cash is an asset. Assets are on the left side of the accounting equation, so if we want to increase them, we put amounts on the left or debit side. Common stock is an equity account on the right side of the accounting equation, so we increase equity accounts on the credit or right side. But remember while you're doing these, if you need to decrease anything, you have to do the opposite of that rule. Everyone okay with that? Okay. In C, purchase $12,000 of equipment, paying 25% or $3,000 in cash, owing the rest, $9,000, using a 2-year note. Okay. What did we receive? Equipment. Equipment is an asset. We increase assets by debiting. They're on the left side of the equation, so we put amounts on the left side, which is the debit side. Remember, and Connect always says enter debits before credits. We have to do that. Now, what did we give? Well, we gave cash. Cash is also an asset. You increase on the left side, but I don't want to increase. I want to decrease. So I'm going to put amounts on the right side. 25% or $3,000. And the other thing I gave was a note payable, and it's greater than a year, so it's a long-term note. Liabilities are on the right side of the equation, so we increase on the right side, which is the credit side. This is an example of a compound journal entry, more than one debit or credit. So we first list all the debits, then we list all the credits. The total of the debits, 12,000, must equal the total of the credits, 9 plus 3. or 12,000. How are we doing with that one? Any questions? Similar to the last chapter, I believe. Okay, next one, received $7,500 in cash for consulting services that you're going to perform next month. So we said because we're not doing anything, we can't record it as a revenue this month. We owe our customers that work, consulting work. So we used deferred revenue, which is a liability, and liabilities mean you owe something. In this case, you owe the work. But we did receive cash. Cash is an asset. Assets are on the left side of the accounting equation, so we left side or debit to increase them. Deferred revenue is a liability. Liabilities are on the right side of the accounting equation, so we right side or credit to increase them. Every journal entry has at least one debit and at least one credit. If you have any questions, let me know. By the way, see this hint thing? If you have a hint on a problem, it shows you how to solve a very similar problem. Bought and received $1,000 of supplies in account. Supplies is what you're receiving. Supplies are an asset. Assets are on the left side of the equation, so we left side or debit to increase them. You're not paying, you're buying on account, on credit, so we use accounts payable. We want to increase the liability, accounts payable. Liabilities are on the right side, so we increase on the right side, which is the credit side. Number 6, receive the utility bill for January. It's due in February. Since we're in January and we receive the benefit of those utilities in January, we have to record an expense in January. Remember, expenses are debited to record them. We're reducing stockholders' equity by debiting. And we are recording this as an accounts payable because we're not going to pay it until next month. Liabilities are on the right side of the accounting equation, so we right side to increase them. And number 7, consulted for customers in January for fees totaling $15,900. So we did the work in the month of January. So yes, we can record a revenue in January, but it's not due till February. So you're not going to get paid now. You're going to get paid later. This will be an accounts receivable. You're going to receive money in the future, and that's an asset. We increase assets by putting amounts on the left or the debit side. And we're going to increase service revenues on the credit or right side because they help us determine our earnings, which is part of stockholders' equity, which is on the right side of the accounting equation. So we increase on the right side. In H, received $12,000 in cash for consulting services that we delivered. Rendered means delivered. We delivered last month. Okay, if we received cash, cash is an asset to increase assets. We debit or put amounts on the left side because assets are on the left side of the accounting equation. Now, if we did this work last December and they recorded the revenue in December, all that's happening now is we're getting paid money that was owed to us. The customer is paying off their accounts receivable. So we need to reduce that accounts receivable. Accounts receivable is also an asset. But remember, assets can be increased or decreased. Assets are on the left side, so we debit to increase. To decrease, we do the opposite. We credit the asset account. And we are on our last transaction. Paid $500 toward the supplies that we purchased back in transaction E. So what did we give? Cash. What did we receive? Well, well, we received a reduction of our bill, right? So if I want to reduce a liability, like accounts payable, I do the opposite of what I would do to increase. Liabilities are on the right side of the equation. So normally I'd credit or right side to increase, but I want to reduce the liability, so I debit. If I'm paying cash, cash is an asset on the left side of the equation, so I increase by left siding, but I don't want to increase. I want to decrease. So I do the opposite. I credit. And I'm going to put the general journal up there so you can see the whole thing, just in case you missed any. Now, we are right at time. It's 11:50. Does anyone have any questions that you'd like to ask me? Okay, so what you might want to do is you might want to get started, if you haven't yet, on the concept overview videos and on the homework, because on Friday I can help you with the homework if you have any questions. You can also pop into an office hour if you want to do that. I'm happy to help you during that time as well with your homework. So the two homework, only one concept overview video is due and one homework problems is due on Monday at 10 a.m. for chapter 3. And then the test is due that night. We've only got, to finish this chapter, we're going to do an unadjusted trial balance like we learned last chapter. And then we're going to learn the net profit margin ratio. So Friday we will do that using this problem, then take a look at the homework and review for test. Okay? Have a great rest of the day.
You too. Thank you.
Thank you. Not at all. Thank you.